All right, everybody, here we are at the Sherman Show. I'm here with my co-host, Sam Lau.
Hey, hey.
And if you're watching us on the YouTube, you see that we are live and we are in video action. So you see us in our COVID-friendly space here on the 17th floor in downtown Los Angeles. But today we have a very special guest kicking off season 9. We got Ryan Simonetti. He is the CEO and co-founder of Convene. He founded Convene back in 2009. Very fortuitous timing. They have 32 locations in the U.S. and the United Kingdom, and the accolades for him are numerous. Forbes says names Convene one of America's 100 most promising companies. Fortune has named it one of the best workplaces in America. The Real Estate Forum's 50 under 40 list. Magazine's 30 under 30. Maybe one day you'll get an ESPN 20 for 20. I guess those are 30 for 30s too. But anyway, I was trying to go with the 50, 40, 30. So welcome, Ryan.
Thank you. It's an honor to be here today.
Yeah, so I think it's, as I said, I think some of this is fortuitous as well, because here we are talking about the digital workplace. We're here in our permanent workplace, and here we are doing a Zoom meeting to have this conversation today. So I think the timing's great, but before we start, can you give people a little bit of background on you, Ryan? Like, where'd you go to school? How'd you start off? Was it your dream to always talk about shared workspace alike? So walk us through how you became the CEO and co-founder of Convene.
Great. So I'm gonna go way back. I grew up in central New Jersey. Was lucky enough to have a father that was an entrepreneur, small business, but actually in the hospitality industry. Was in the food service business. I like to say that entrepreneurship is a little bit of nature and nurture, and I think I was lucky enough to have both. So even from a very young age, I always wanted to do something entrepreneurial. Was fortunate enough to get into Villanova University. Great life experience. I really do think that college really does shape your future in more ways than you can even imagine. And it's actually at Villanova that I became best friends with my co-founder, a guy by the name of Chris Kelly. And we were the two hustlers in college. If there was a way to make a buck and help pay our way through school, or a way to buy an extra round of drinks at the bar, we were trying to do it.
Legally, of course, right, Ryan?
Legally
Illegal
always.
hustle.
But, spring break trips, used textbooks. I mean, this is even kind of pre-Amazon and half.com. And it was clear to both of us that at some point we'd love an opportunity to do something together. So fast forward kind of post-college, ended up kind of stumbling my way into the real estate industry. Growing up or even in college, I was much more focused on sales and trading or investment banking. But during my time at Lehman, I worked in the structured products business there. Really fell in love with real estate as an asset class. Got to work on some really cool stuff back then. I remember we worked on like the first ever real estate CDO. I got promoted after my first year. Had an opportunity to go into the principal investing business there because I really wanted to get closer to the investments themselves. Decided not to do that and was really lucky to get into really like a startup real estate finance. You could almost think about us as, we ended up almost being like a publicly traded real estate hedge fund, a company called Gramercy Capital. We used to trade under the ticker GKK. That business is now GIT, Gramercy Investment Trust, which ultimately went from our business model, which was really being a capital provider from debt to equity, highly structured, to ultimately becoming a net lease business. But life is about timing. I got in there early 2006, rode the wave. We went from a couple $100 million in assets under management to multiple billion. Ended up running one of our investment teams, and then when the world blew up, I started our workout and restructuring business. Our entire portfolio, like many of our peers, became a big giant workout. Probably not too dissimilar than the experience a lot of my friends in the industry are probably going through today. And it just so happened I spent a lot of time working on office investments as well as hotel investments. And this is at the time where I would say the lifestyle movement in hospitality was really starting to bleed into different asset classes. You've got the rise of Equinox. You've got all the amazing stuff that Ian Schrager was doing in kind of the lifestyle boutique hotel movement. You've got the rise of W and the change that had on the hospitality industry. And even, residential developers, whether it be condo or multifamily, were really starting to amenitize and service buildings in a really fundamentally different way. But office landlords hadn't done that yet. So the idea for Convene was really taking the best of hospitality, design, technology, service, amenitization, and could you apply that to office and technically run an office or a workspace more like a hotel. And look, I was lucky enough to be a 27-year-old kid that was able to scrap together some money and convince a big landlord to let us lease space from them and really start the Convene journey back in 2009.
So we hear a lot of this about like a sharing economy, gig economy, and sometimes it's painted with a negative light. How do you think about that? So you're talking about shared workspace, you're talking about, I like the phrase amenitization. I don't know if I've heard that one before, but you're talking about providing a service to people. It's not just, here's 4 walls and, come in, use your space, go home for the day. How did you think about really planning that out? And, as you talk about this shared economy, what's your vision for it?
Look, it's a great question. I'll even go back to our time at Gramercy. Our biggest investor at the time was SL Green, largest commercial office landlord in New York at that time. We ended up owning a really large office portfolio ourselves. And when the financial crisis happened, every single one of our customers called us back and pretty much asked us to give back space. Right? Every company, what I've realized is you either have too much real estate or you have too little real estate. Your real estate, especially office, doesn't move like your businesses move. And if you went to any CEO of any company, especially given how complex the world that we live in, they would ask for agility. They'd ask for flexibility. And real estate really never was able to offer that until companies like us and WeWork and others really came around at scale. So to me, I just really view it as an outsourcing opportunity. And if I was a company, would I rather design, build, and manage all of my own hospitality space, my own meeting, event, and conferencing facilities that I use, a few times a year? That's not really my core business. Do I want to lease an extra 50,000 square feet of space that I may or may not need? Or do I want to sign a 10-year lease when I've only got a business model that gives me visibility for the next 18 to 24 months? And I just thought that not only could you reimagine real estate from a design and hospitality perspective, but could you actually fundamentally change the way that customers buy? And yes, it is in a shared consumption model, right? It's outsource over insource. It's shared infrastructure over owned infrastructure. And I believe pre-COVID and then coming out of COVID, access is the new ownership. And I don't see that changing. And I see that mindset and that business model isn't just focused on the consumer anymore. It's really moving into B2B businesses, including real estate.
What do you mean by access versus owner? Define that term.
So if you think about, like, for you guys, I'm sure, you've got, I don't know how many square feet you have in LA, but you probably signed a lease for, 10, 15 years. You had to invest a lot of capital. And when you designed that space, it was based on a certain headcount projection. It was around a certain strategy that you guys had as a business, a certain way that your people would interact with your space. And I think the reality is that none of us have that type of visibility into our business. And so as opposed to signing a long-term lease or owning your own office building and kind of trying to control that experience yourself, you can outsource to a company like Convene, and we design it, we build it, we manage it, we take care of the entire experience. And instead of having to take space for 10 years, you can buy a conference room for us for the hour, or a meeting for a day, or a workspace for 12 months or 24 months. And so we're just creating so much more elasticity in the cost structure for our companies, our customers.
So have you guys built any trading desks for investment firms for a temporary basis yet?
We actually built in partnership with Brookfield and manage an entire front of house trading operation for a Fortune 100 financial institution. It's about 90,000 feet.
Okay.
So yeah, we are seeing that more and more companies, big and small, are looking to companies like Convene to really be kind of a full service outsource solution.
It's amazing. I'm going to talk to our CFO about that as we're renegotiating our lease these days. So that's why that was a personal interest there. So, so you talked about the post-COVID world. And so there's a lot of headlines out there that speak of the demise of the office real estate, that work from home is here to stay. It'll never come back. All we need is the Newsweek article to say it's not going to work, right? The contrarian indicator of Newsweek cover stories. But that death has been really promoted by a lot of people. We hear it a lot in our industry. What is your sense? What do you see the future? Is it we return back to the pre-COVID world? Is it a permanent work from home solution? Is it some hybrid approach to these things? How are you guys thinking about it? And where are you seeing that interest from your clientele?
Yeah, look, I think to us, the future is hybrid. When you go through, I think, crises like the one that we're going through, it's easy to over-index, I think, in either direction, right? The pendulum, tends to swing wildly in either direction. And where we try and focus as a company is less on the trend, the headline, and focusing a little bit more on the trend line. And when we think about COVID is really just the great accelerator, right? If there was a trend that was happening pre-COVID, or a customer base that maybe was in like early adopter phase, but now you're quickly seeing stuff become adopted at scale. And look, work from home and distributed work is something that's been happening the last 10 plus years, at least, that we've been in business. It's never been adopted at this scale this quickly. And I think what's happened is every company in the world is going through this giant work from home experiment together. Big, small, high growth, not high growth, family owned versus Fortune 100. And what's interesting is if you look at the surveys and the data, and not just the stuff that we're doing, but like even McKinsey, you published research on this recently. Look, the majority of people enjoy working from home, right? It's like 80% of people enjoy working from home. But at the same time, we all know that there's challenges with working from home, right? If you're a parent and have kids that are not in school and are home with you, lack of reliability in your wireless or your network infrastructure. And so working from home is also not perfect. And what we're hearing and what we're seeing is that, and I think the last research I read had something like 70 to 75% of employees surveyed envision a hybrid work week, where there's days I choose to work from home, there's days I choose to work from an HQ, and then there's ultimately days I choose to work from a third space like Convene. And so for us, like, Convene's future is hybrid. It's the intersection of physical and digital, and it's also creating a network of spaces that can solve for dedicated on demand, and then have a technology platform that can support virtual in a really seamless and magical way.
Yeah, I've heard you say before that you're in the face-to-face business. It's something I heard from you, which I think about our business and what we do. We're fiduciaries. That the root of it is trust, right? That's really what it is. And there's a lot of this face-to-face, and we see this over the last 6 months. Trying to onboard new clients and that due diligence session, and how important it is to have that interaction. And so, when you think about your shared workspaces, is that what you're seeing people really try to do with the Convene space that they're leasing out from you, or renting for the day, or whatever that period is? Or is this more that people are just trying to have the sanctity of some privacy, to do conference calls, to do some thought, some deep thoughts, and be quiet? Or how are you seeing people utilize the space? Because I could see that being something very beneficial. Again, as we've went through this due diligence process lately, it's very important to have those face-to-face meetings, because that's the lifeblood of our business, right?
Yeah, look, and I don't know how it's been, for you, but it's been hard for me to build new relationships through COVID. I think there's something about meeting somebody face to face, breaking bread, that to me is foundational, not just to us as, I think, social human beings, like, innately, but I do think that it's really important part of the trust and relationship building process. And that's why Convene, I mean, our name, it's about bringing people together, and you're really bringing them together around a great experience. And when I think about Convene and our positioning in the market, we are the premium brand, we are the full service solution, and our customers are coming to us yes for flexibility, yes to save money or save CapEx or increase agility, but they're really coming to us for an experience. And by being in a convened space, whether it's for a day for a meeting or permanently residing with us and moving your office into our workplace product, it's really about attracting and retaining talent, and it's about creating relationships with customers. And that's not for everyone, but I think for our companies, which tend to be a bit more progressive, the experience piece of this is really important. And honestly, I think coming out of COVID, if I can choose where I work, what's going to bring me back to the office or to a space? And I think that's where Convene is so well positioned, because we know how to create a great experience. That's the business that we're in.
The thing that brought me back to work was this today, conversation, and I had the best surprise I've seen in 2020, and that is Sam Lau's hair. Right? If we look at his hairdo, he has grown it out. This is the post-COVID Sam.
This is
He's
it.
competing with me. If I'd have known, I wouldn't have cut my hair. That way we could have a true Samson challenge.
Yep.
But
I will say
that is one of the good.
My curly hair is jealous of the flow. I'll tell you that.
Yeah.
I'm jealous of your curly hair. So I'm gonna put in the perm like Kenny Powers one of these days and see if I can rock it. 6 months of growth here, but 6 months into this pandemic, I guess, in terms of your viewpoint and what you've seen at Convene, what have you learned in these last 6 months? Does it present more of a challenge, or do you see opportunities in this in terms of growth for Convene going into the next 6 months, 12 years, if we continue down this path?
Yeah, look, I mean, our business, being in the industry that we're in, a large portion of our revenue is, hosting meetings, events, conferences, and, kind of all of the hospitality services that wrap around that, and having people in space. So the last 6 months for us has been, obviously extremely challenging. We had to close, our entire portfolio in early March. We've only chosen at this point to open up a portion of that portfolio. And, we had to make all the really tough and hard decisions that companies that are, I think kind of at ground zero of this crisis have had to make around cost cutting. And, I'm sure, for you guys, even as leaders, like the hardest conversations to have are the human ones. And, this has been really, really tough on our team and, our leadership team. But I'd say the hard part for us is over. We had a strategy called Survive and Thrive when we started. And I'd say the first 90 days was really about survival, and doing the hard stuff like cutting costs and closing locations, raising capital, restructuring deals that we had with landlords. And the last, I'd say 90 days has been this amazing opportunity that I think most companies never get, especially at our stage. We were high flying, about to do a pre-IPO round, growing 60+% a year. When do you ever get to take a giant step back and really question everything you're doing? And you just don't. And so I think what we've done is really taken this as an opportunity to really ask ourselves, in a post-COVID world, knowing that there's going to be new challenges and new opportunities, where do we really strategically want to take the business? What are the core competencies and capabilities that we can leverage, knowing that although the world is not going to be radically different, it's going to be different enough that we need to think different. And where are the opportunities where we can invest in innovation to really position us well moving forward? And I'm really appreciative of our team and our board for not letting a good crisis go to waste, and I think have really positioned the company to be successful coming out of this. And I think that there will be winners in our sector and there will be losers. And, I think all the tough decisions we've made and all the strategy work we've done the last 90 days is going to really position us to be well positioned. So I'm very, very optimistic and excited about, what the future holds, knowing that, look, the next 12+ months until we get a vaccine are going to be tough.
Yeah. Yeah. I like how you call it Survive and Thrive, going back to the roots. And I think it is important to step back. We just celebrated our 10-year anniversary at the end of last year, and we did a lot of that ourselves, and just thinking about our business. And, unfortunately in the investment world, when bad things happen, there's not a lot of time to think. It's react. It's making sure you have the right leadership and making sure you put those people in place. But let's go back to your roots. You started off talking about you came into office and hotels. I can think of no more two industries which are more exposed to COVID and the ramifications and the workouts than those two industries, especially in commercial real estate. That's the center of it. Obviously, retail is there as well. But as you think about it, what you've learned over the years, how do you think about what the office space, we've already talked a little bit about, but what do you think the office space looks at besides this hybrid role? And then also, what about the hotel industry? I mean, you have some experience there. Curious to get your thoughts on what that looks like, because that is the epitome of the amenitization that you're talking about. People go for a specific need there. How do you think about those two things? And those are probably one of the bigger challenged areas of the commercial real estate market today.
Yeah, and I think you have to think, I like to think about the world in kind of like short, medium, and long term. And I think in the short term, whether you're in our sector, whether you're in the hotel sector, or whether you're in the commercial office sector, the short term is going to be challenging, right? There's no question. And whether it's challenging specific to COVID or the economic impact of COVID and the impact that that's having on your customers and markets in which you operate. The question is, as you start to think like medium to long term, like post-COVID, what is the opportunity within office as an industry and hospitality as an industry? From an office standpoint, just like this country is over retailed, this country is also over officed. But the good thing about that is a lot of that inventory, in my opinion, is functionally obsolete. And so what we saw pre-COVID and what I believe we will continue to see post-COVID is what I think about as a flight to quality, right? If you were a new development or a really well-positioned, like redeveloped asset in office, even if you were in a soft market, even pre-COVID, you actually did really, really well because there's, companies are willing to pay a premium for quality. So I see this continued bifurcation in the industry of like have and have not, which is either you build the right product, you deliver it at a really high level, you service the heck out of it, and I think you do really, really well. And if you don't do that, I think it is a pretty binary outcome. And I think both in hospitality and in office, you'll see people struggle that aren't willing to commit the capital or have the right kind of business model, brand, and strategy to compete coming out of this. Do I think that the office is going away? No. Do I think as an investor, there's still a huge opportunity to make money over the next 5 to 10 years in the right type of office assets? Yes. Shifting gears to hospitality. What's interesting is one of our design philosophies is think global, act local. And there was, I don't know if it might have been 18 months ago, there was an article that came out, it might have even been Skift, and it went through like the top 20 fastest growing hospitality brands. And they only had one thing in common. They were not cookie cutter. They were all designed experientially unique into the markets in which they operated. And what I think that we're seeing pre-COVID and post-COVID is this desire for authenticity and true experiences, right? I mean, we are in an experience economy. And so if you're a hotelier moving out of this, I don't know if I'd want to own like a cookie cutter branded hotel coming out of this. I do think that consumers are going to crave unique experiences. And so that to me is where I see the biggest opportunity in hospitality moving forward. Big question mark to me is what happens with business travel coming out of this.
Right.
I know myself.
I was going to ask about. Yeah.
I don't know how about you guys feel, but there's many airplane ride I took across the country or overseas to take 2-hour meetings or 2 1-hour meetings. And I just don't know with Zoom and this change in behavior, what's the long-term impact on business travel? And to me, I don't know if anyone knows the answer to that yet, but that's something that we're keeping definitely a close eye on, especially given our meeting, conferencing, and event business and how tied we are to technically group travel.
Yeah. Well, I mean, from our perspective too, that's part of, we help keep the hotel industry afloat, right? Business travel is a huge part of RevPAR when you look at the hotel industry, revenue per available room. And so when you think about that, because we're indiscriminate buyers, right? We got to be there. We're captive. we're paying market rates. Hopefully we got something negotiated. But at the end of it, I mean, we are the captive buyer. You said something about a plane ride, same idea. And I think, we look at a lot of data to try to assess this. And so, when the COVID crisis first hit, there was a lot of popularity with the Apple mobility indices, right? Where they were showing people moving around. And these numbers are somewhere, depending on the region you look at, can be 20 to 50% higher. So people are on their phone more and it's getting more requests there. But I like to look at other metrics, and we use like TSA throughput was one. We look at hotel available rooms, RevPAR, all those. These numbers are massively depressed. And to me, that's really, it's not really the end consumer as much as it's business travel. That's really keeping those down. Can you share any data with us that you're seeing from your side that it gives your sense of where we are in some of these recoveries? And obviously, you've talked about having to pivot, having to reduce the availability of some of your properties and like. Is there anything you can show us on how you think this recovery is going, and how you think about it, how you're looking at it when assessing the viability of this continued business travel?
Yeah, look, I think real estate's still a very local business, and I do think that you have to look at this data at a macro level, but then also kind of drill down region to region, city to city, because the data is different. And what we're seeing and hearing from our customers is different by market, honestly. But there are some, I think, consistent trends that we're seeing in the data. The first is, for us in our little specific, subset of the world, July was like rock bottom, right? If I look at all of what I think about is like our momentum metrics. So, what's happening outside the funnel, from a lead and qualified lead perspective, what are we seeing kind of days outstanding to convert from tentative to definite from a contract standpoint? What's happening with cancellation of future programs? And what I can say is that although week over week, we're not seeing dramatic improvement, we have been seeing relatively consistent upticks, week over week since I'd say early July. We're nowhere near back to pre-COVID levels, especially from, I think, kind of a top of funnel metrics perspective. But we are seeing ourselves slowly working our way out of this. I think that this is a journey. I do not believe that this is something 90 days from now we're back to normal. We are underwriting and modeling, that this is a 12 to 24 month recovery, and a lot of that is predicated on science.
Yeah, from these levels, not from the 6 months ago.
From these levels, exactly. Right. And also unclear to us is what's the real residual economic impact coming out of this. Right. And a lot of that depends on stimulus plans and support from the federal government, which I think we did a good job early. But most of my peers in the industry now, there's really no access to additional support or stimulus dollars today. And you can't run a restaurant at 30% occupancy and survive, or utilization. And I think that there's a lot of businesses and industries that, if we can't get additional stimulus dollars out in the next 6 months, that there's going to be a long-term impact on the economy, because those small businesses, they just don't bounce back.
Yeah.
So
you share a lot of those
that we got to keep.
Yeah, we share a lot of those views on the macro front for sure. But
yeah, so we saw, we started off by talking about how you have roughly, over 30 locations throughout the U.S. as well as the U.K. Are you seeing significant or material differences between the clients that you have in the U.K. versus here in the States?
So we actually haven't officially opened in the U.K. yet. We're opening late next year. That project got delayed just because of COVID and some delays in the construction of the actual building we were going into as part of COVID. I mean, we're close to that market. And honestly, I think the UK and New York, London, because it's London where we are, in New York, I believe that there's a lot of similarities. I think a lot of the same data that we're getting in New York is to some extent corresponding with what we're seeing in London, at least around return to work, getting back to meetings. Interesting, about the work from home thing, the US and the UK are unique in that we have relatively big living spaces. right? And whether that's we have homes or we have bigger apartments where you can actually work from home effectively, and we have relatively good broadband infrastructure. You go to other cities like in Asia or even in Paris and other parts of Europe where you don't have the space, working from home is like really not possible. And so if you look at kind of the return to work metrics, country by country, city by city, there are big differences between, let's call it the US and UK relative to other parts of the world.
Yeah, I think Sam's hair is making him go back to his Beatles days and think about the UK right now. But I want to go back to what you're saying because I think it's important too. You talk about the stimulus and the requirement to get the economy back going or going back to some semblance of where it was, and that's something we've been harping on too. And we know that when job losses come and they become permanent, so there's a lot of things that look transitory or temporary to start with. But the job losses that people are getting furloughed now, or the furloughs start, I think, this week with a lot of the airlines, right? As you look at this, that those structurally, those jobs have a tough time coming back. And so what we've seen is a lot of the temporary job losses are turning into permanent job losses. And so another thing that stimulus may not be able to help, right? Or just, sending transfer payments to unemployed people is that you've got to get people back into the business and back into the economy. And so as you think about how you guys are providing workspace and helping folks, how do you think about playing a role in that? I mean, are you seeing people that want to do job fairs and training? Just try to think about what this looks like, as we turn the calendar over next year, and other things that maybe are not as traditional as what you did pre-COVID that you're thinking about doing going forward.
Yeah, look, it's a great question, and something that myself and our leadership team talk a lot about, right? I mean, it's this concept of doing good and doing well. I'd say the first thing is the easiest thing we can do is execute our business plan and rehire not just our own furloughed and laid off workers, but also get back into growth and expansion mode. Pre-COVID, we had just under 1,000 employees. We were on schedule to hire an additional 500. So although that's not I guess significant in the big scheme of things, it does have a real impact, on those individuals' lives, and obviously, the communities and cities that we serve. So that's kind of, I think.
Yeah, don't downplay that, Ryan. Don't downplay that. It's important because if everybody's doing that and CEOs are thinking that way, that's how we build a better country. And that's how we do things. So don't downplay that. I'm gonna give you kudos for that.
I appreciate that. So I'd say that's kind of step number one for us, and then. Step number two, what we're seeing and hearing from our clients, and we're doing a lot of interesting work, in and around the education space, both on the corporate training side, but also we're a satellite campus for a lot of continuing education and MBA programs. So just like I say, the future of office is hybrid, I think the future of learning is also hybrid. And a lot of the larger universities are looking at ways to move their content, right, their programming closer to the population center. So for example, if I'm Temple University, or if I'm Georgetown or Villanova or NYU, I've got really big alumni bases, not just in the Philly area, but I might have a core in LA or Chicago or New York. And we are having some really interesting conversations with those partners around, can we help them bring that content and curriculum into other markets that they don't have a physical presence that's far, far away from where the core campus is? And can you use not just the space, but also our technology platform to really help facilitate these types of kind of dynamic hybrid learning environments? And I think that there's a lot of value to be created there. When we start to think about structural unemployment, which it's true, right? A lot of these furloughs and layoffs, you talk to CEOs and it's like, okay, well, it's a lot easier to let go, and it's a lot slower bringing back. And I do think that there's going to be, a larger percentage of the unemployed that it's structural. And, I think we as an organization, I think other companies, and I think, we as a country have to figure out from a learning and development and training perspective, what are the opportunities that exist, and how do we start to replace and retrain these people for the jobs that are going to exist. So we're trying to do that in our own small way. And we know that from talking to our educational client partners and also a lot of the big corporate L&D, clients of ours that, there's a lot of thought and effort starting to go into that. And ultimately, how does that help, the recovery coming out of this crisis?
Yeah, I wouldn't downplay that again, because I think it's important doing it in your own way, doing it small. When you sum up a lot of smalls, it becomes medium to large. And I think that's the way we need to focus, and how we can all do better as we kind of turn the corner in this post-COVID world. But there's one more thing I thought about when you were mentioning kind of being closer to the people. And we've heard a lot, at least anecdotally, we've seen it from some localized real estate markets, that there seems to be this urban flight once again, right? Where people are going back to suburbia, craving that space. You mentioned the advantage of the U.S. having so much land and space that, we're fortunate enough to have that. And there seems to be a desire for that. How do you think that Convene can help play into that market too? Is this helping kind of accommodate people that need that real estate and space and use more temporary workspace coming in? How do you think that you guys will play a role if indeed this is a trend that seems to be kind of getting some legs behind it? There's some anecdotes before COVID, but we're seeing a lot more, at least over the course of the summer.
Yeah, look, and I think there's a lot to unpack there. And, we've spent a lot of time, looking at the data and trying to understand, what's happening. And that includes, housing purchases and, what rentals absorption looks like in different markets, and then kind of tying that back to the office industry and seeing like, where are leases really happening, and are companies really moving to this hub and spoke strategy, and are they moving offices out of New York into the suburbs? And look, I think generally speaking, is there a certain demographic that back to COVID being the great accelerator? Yeah, if you had kids, were trying to make it work in the city, you're probably planning on moving out in a couple of years, whether that was because of cost or space, then yeah, like this was what put you over the edge. And I've got a lot of friends that have, chosen to move out of New York, over the last 6 months. But reality was they were going to make that decision anyway in the next year or two or three. Mm-hmm. We're less focused on urban, suburban, and I'm more focused on what I think about as the rise of the rest, which is really a trend that was happening pre-COVID. But think about like a Nashville, an Austin, an Atlanta, a Charlotte, a Charleston, a Salt Lake City, Utah, right? A Denver, a Seattle. And, I always say I'm on the board of the Regional Planning Association, which is kind of the advocacy group that comes up with the future plan for New York City and the tri-state. And, I said to the board about 2 years ago, I said, we're not competing against London and Hong Kong and Tokyo anymore. We're competing against Miami. We're competing against Nashville. We're competing against Austin. We're competing against Dallas. And what I do think you will see, and this definitely is factoring into our future growth strategy, is markets like Nashville, where I can live 15 minutes outside the city, not have to get on mass transportation, live in a great house with a great backyard, and still drive downtown into a great city and be at my office without having to go on a train. That's compelling. And so I'm less a believer in urban to suburban, although I think we'll see that and are seeing that outside the big core gateway cities. I'm much more focused on this shift to the second and third tier cities that I think have a lot to offer. And affordability is one, lifestyle is two, and potentially not a dependency on public transportation, which I think some people, coming out of this might be a little bit scarred around getting on a train or on a bus.
Yeah, no, we were big fans of those real estate markets on the commercial side for many years. And I agree with you, there's an accelerant. So Sam, besides your haircut, is there anything else you want to tell Ryan about today before we get to your favorite part of the show?
I think I'm ready for my favorite part of the show.
All right. Well, we're going to introduce you to Hippie Sam, and he's going to introduce you to our favorite part of the show called Sherman Says. So Sam, kick it off.
All right. The favorite part of the show is called Sherman Says. And what I'll do is I'll offer a series of prompts between you and Mr. Sherman here, to which you'll provide a top of mind response. And I'm going to start off the first one with Mr. Sherman on company culture.
Critical.
To you, Ryan, directional thinking.
Important.
Sherman Office of the Future.
Everywhere.
Hybrid events.
Intersection of physical digital.
Hospitality versus co-working.
Say it again.
Hospitality versus co-working. Throwing some jargon in.
Yeah, that sounds like that was Ryan's, and you flipped the script on me. Hospitality versus co-working. I'm gonna go with the intersection again. You want to blend them together. Yeah, he got me. He stumped me.
He got you. I was going to go with integrated on that one.
Integrated. Yeah, I that's the word I was looking for, and I was using intersection. They're both math words, right?
That's
yeah,
it.
they're both math words. So anyway,
All right, back to you, Ryan, with challenge of 2020.
Patience.
Repurposing CRE.
underway.
Wildcats.
Championships, baby.
And the last one for each of you, Sherman's is most useful technology in a pandemic.
VoIP. And the reason for that is I realized that my cell phone does not work well at my place. And thank goodness for the voice over internet protocol technology where I can use my computer to dial, or I'd be hapless. So I'd have had to move just simply on that. So,
And then we'll close it off with one for Ryan. Game time decision on dudes with long hair.
Envious.
all right. So those of you that are listening to this podcast, you got to go to YouTube. You got to look it up. Remember, our channel is youtube.com/DoubleLine Capital, all one word there. You can see this great dude that we're talking about. It's sidetracked half the conversation. You'll see why. And if you can, let's vote on it. Let's get some feedback out there. Sam is talking about cutting it. I say no way, Ryan. What do you say? I mean, he's got to go. Oh.
Got to run with it.
Yeah, run with it. So there you have it. So thanks again, Ryan Simonetti, CEO of Convene. Thank you for joining us today. Really appreciate your time. Thanks for doing this physical digital world and this intersection of the integration.
Hybrid.
Yeah.
Thanks a lot, guys. Appreciate it.
Thanks again. And for those of you out there that are not watching this on the YouTube channel, you can find this on our website. The Sherman Show is on the DoubleLine website. It's on iTunes, SoundCloud, iPod, Stitcher, Spotify. We still don't have a Joe Rogan deal. We're working on it. Spotify, call us, okay? Anyway, tune in soon. Thanks for kicking us off, Ryan. This is very prescient, and look forward to speaking with you again. Take care.
Awesome. Thank you.